Welcome to the Orbit. It is Monday, July 8th. We've got SPX up about 0.25% to start the week. And that, of course, we are at all-time highs in the SPX after a very good week last week, which you can see the last couple of days around the July 4th holiday of last week, and that steady move higher. Options are priced pretty low IV for this week, and something to watch for is how backloaded this week is with economic data, and then the beginning of sort of earnings season in earnest begins Friday with some of the banks. We'll get to that in a second. So right now we've got an expected move of just under 1%. That is very low IV. You can see that at about 11.4%. For the next couple of days, you're even under 10% tomorrow. You've got about a 9 on Wednesday, a 9 IV, and just a 0.5% expected move between now and Wednesday. It's not uncommon to see a 0.5% expected move for 0 DTE for same day expiry. Now things change in the options market going into the end of the week, and we see this uptick in vol about to call it 12 IV on Thursday, and then about 11.5 IV on Friday, and that could pick up as the week goes on. And what we've got here is we've got that CPI print this week on Thursday, and then Friday we see some of the big banks report. We see Wells Fargo, JP Morgan, Citi, and a bunch of other stocks start to report, and then we kind of roll into the heart of earnings season over the next 2 weeks. Right now we have a 0.8% expected move into Thursday right now, with all of Monday, Tuesday, Wednesday going into that and being incorporated into that expected move. For a CPI day, in any big inflation data recently, we've seen it probably at least a 0.6% expected move, depending on what the market is doing right into it. So right now at a 0.8% expected move, you could see vol increase to kind of keep that at about 0.7% expected move on Wednesday at the close going into Thursday morning CPI print. So in order to do that, options obviously would have to increase in IV to kind of hold that nominal expected move. And so keep an eye on that. If you are a seller of weekly options, it will probably increase in IV. If you were selling this morning, it would increase in IV into Wednesday afternoon. As far as 0 DTE, we are only at about an expected move of about 0.25% right now. That is about what we've already seen today. So options are pricing either a reversal back to unchanged or slightly down on the day, or up about a total of about a 0.5% move for the day. Some other interesting things this week. One, with CPI coming out, you've got this IWM chart, which is an interesting one because it really shows. You see the 16 IV on Wednesday and then a 22 IV on Thursday. We often talk about how rate sensitive IWM is of the major indices, and you can see that right here on this chart. So for the week, IWM options are pricing about a 1.7% expected move. The other thing that could happen with some of these ETFs and these major indices, and particularly the sector ETFs, is as you start to approach where you're sort of heavily loaded individual companies. I can take XLF for this week. We are going to see this is pricing as if XLF has earnings this week and next. TLT is another interesting thing to check in on. We've had some pretty volatile intraday, one day, day-to-day moves over the past month in TLT, and you can see that on this chart. We're on the 1 month chart right here. And look at these moves. We were up here almost at about 95 in late June. We got as low as we dipped below 90 at the beginning of last week. And now we're back up to 92.5. And basically, the market held strong as TLT was making this move lower. And we talked about a little bit about this last week, that TLT, if TLT kept going lower, it would be very tough for the market to hold those gains and stay near those all-time highs, and you might have seen a pullback. However, if TLT bounced and held that level and then started rally, it would give the market some room to sort of break out to new highs. And that's kind of what we saw last week. So always, as always in this environment, keep an eye on this TLT. Keep an eye on it, particularly as we get out to that CPI print, because sometimes it can give you a little bit, not necessarily that you're going to see the market immediately react to moves in the bond market, but a sustained move in the bond market might be enough to either stop this rally and break the market for a period, or if you see TLT, using it as a proxy for the entire bond market, if you see TLT continue higher, that gives room for stocks to rally as well.